So, how do I actually make money from investing in shares? Well, there are several basics that everybody should follow. First off, never borrow to buy shares. Never invest more than you can afford to lose in shares. The type of investment you invest upon depends upon what your individual priority should be. Are you interested in share price growth, dividend return, what kind of risks are you wanting, how much do you have to spread your risks? Those are the things you have to do. Slightly simplified way that I do it comes down to this. Firstly, it's virtually impossible to get any price sensitive news, especially in the major companies, before the experts do. So normally any news is actually priced into the shares themselves by the time you get to deal in it. However, you can predict which sectors are likely to grow in the future and which are likely to collapse. A few years ago, as an example, talking to some friends about two particular sectors. One was shops renting out DVDs, and the other companies making airport security screening devices. Now, one of those areas had a bright future, one of those had a very dim future. Leave you to work out which one it was. Now, in selecting a company, I generally like to go one that has substantial physical assets in proportion to its actual share price. This tends to make less money by my method, but also tends to have less risk. I also like those ones that give a reasonable but not spectacular dividend. That way you still make some money even whilst holding on to the shares. If you were to, say, randomly pick shares over a period of time, they have a chance of falling of about 45% and a chance of rising of about 55%. Various factors affect the share price over time, many of which have little or no impact on the long-term profitability of the company. For instance, oil prices, broker recommendations, political elections, industrial disputes, all these may cause the share price to go up and down. Now, combining these two factors, the chance of it rising and falling, and the random fluctuations of these disputes, etc., is how I make money from shares. Now, if you buy a relatively small amount of a particular share that you think has long-term good prospects at what you think is a cheap price, after checking, say, recent fluctuations, so you can check where it's fairly low, you now have a 55% chance of it going up, say 10% in value, where you could sell the shares and make a nice profit when you take into dealing charges, taxes, etc. into account. You could hold on for more profit, but now the share is actually overvalued and has only a 45% chance of rising and a 55% chance of falling. And until you sell any shares, any profit on paper is just that, a paper profit. It's always good to get that profit banked. You could make more money, but you could lose the profit you've actually got if you don't bank it. Now, of course, after you buy the share price, it could fall back down, but you don't sell the shares just because they fall again. It's a paper loss. It's not a real loss until you actually sell them. However, now the share price is actually closer to the asset value once it's fallen, and say that it now has a 35% chance of falling in value, but now has a 65% chance of rising in value. So it's now time to put a little bit more money into the share, again hoping for that 10% rise before selling again. As the price rises and falls, you buy and sell accordingly. This can mean you held on to some shares for a while with a paper loss on your book, but you're still collecting dividends on those and making a profit from those shares you actually do sell. If the price actually falls very low, somewhere close to where the asset value is of those shares, they often then a target for a takeover and very quickly reverse any paper losses you've made. There may of course be significant factors which do affect the long-term profitability and viability of a company, which are not covered in this quick guide. This actually is just a quick guide into part of the way I buy and sell shares and make money doing it.